I don't know who needs to hear this, but the banks will advertise you what interest rates are, what down payments are, but no one ever tells you about the hidden thing called closing costs. My name is Brock Irwin. I'm a loan officer in the DFW area. I've worked with thousands of clients and helped them prepare their finances for whether that be buying a house or just getting their finances in order. So I make videos on this channel to help you understand whether you need to open a new credit card, get a new bank account, or really get your finances in order to buy a house next year. Now in this video, I'm going to break down everything that has to do with closing costs and what banks really don't tell you when you're trying to get a loan. Now you'll learn about all of these expenses, but they're not until the point until typically you've fallen in love with the house. Now I want to take you from A to Z about every cost that you can expect when you go about buying a house. Now I'm going to go ahead and get started, and this could feel like a long list, but there's a really standard breakdown and a lot of them may not even be coming from your bank. So when you finally get to the point of getting pre-approved, you find a house, you go under contract, you're going to get what we call a loan estimate. Loan estimate is a standard document that every single bank uses. It's going to break down your fees in a really organized manner so you can really understand and even compare between different loan options that you've got. On this document, there are going to be different sections that are going to tell you exactly what each expense is and then where those expenses are actually going. So first I'm going to start off with what is the expense that the lender is actually taking from you. This will be in section A of your loan estimate, and you're going to see points, you're going to see processing fees, underwriting fees, administration fees, all sorts of fees that sound crazy, but here's how each one of those applies to you. The first and biggest expense is going to be what's called points. This is going to be associated with whatever interest rate you choose. So rule of thumb, if you choose a lower interest rate, you might have more points, but if you choose a higher interest rate, you're going to pay less points. A point is a percent of your loan amount charged into your closing costs. It's a big expense, but this is completely optional to you as the buyer. Now those additional fees, those are actually going to vary per bank that you use. So some banks might charge you a processing fee, some might charge you administration fee, preparing documents, or underwriting. This is going to vary bank to bank, but I typically tell people to expect anywhere from $2,000 to as high as $6,000 or $7,000 in this section because it can vary a lot. Now moving on to the next section, this is where things get away from your lender, and these are a lot of third parties that help your loan actually go through processing. In this section, you're going to see things like your appraisal costs, your credit report costs, verifications of employment, flood certifications, all of these different third-party companies that are helping all the things that are going on in the background to help you get into this house. When you see these, don't yell at your loan officer because they're not in control of any of these. They're all third-party companies, but for an appraisal here in DFW, you could be looking anywhere from $600 all the way up to $800. This is going to vary if you're way out in the country, any different expenses if you're in another state. So how this is going to work, your bank is going to reach out to multiple different appraisers trying to get the best quote for you in that area. So know that your bank is actually on your side in this position and they're not individually choosing a certain appraiser that may cost you more money. The next major one being your credit report. This is going to vary a little bit, but bank to bank, it's almost the same because the credit providers, they're all around $200 for a credit report. Now, the last thing is your verification of employment. This doesn't apply to every single loan. Let's say you work a salary job. The bank is going to reach out to your employer to verify that these pay stubs that they got aren't just Photoshop, they're actual pay stubs and you're actually employed with them. So when you see these sections after the bank gives you your numbers, these aren't the actual numbers right off the bat. These are what the bank typically sees from other transactions that they're doing from other people buying houses. When you see these are likely to get adjusted down, but these are going to be good numbers for you to start planning how much you need for your cash to close. So the next section is going to be your title expenses. These are fees that are really set by the title company and nothing to do with the bank as well. So these fees, it's going to say services you can shop for, but the good thing for you is anything in this section, it's all set by that title company and your real estate agent is going to be negotiating and figure out which title company is going to be for this transaction. You don't need to look around for all the different title companies in the area and see who's going to fit for you because all of their fees are really standard and set by, here in Texas, the Texas Department of Insurance. So these fees aren't going to vary widely and you're going to be protected by whatever amount that they end up charging here. A lot of this cost is going to depend on the size of the house that you're buying, but it can be as low as $2,500 as high as $4,000 to $5,000. Talk about this early and you'll see a very close number as soon as you see your numbers for the first time. What we've covered so far is really everything to do with you actually getting a loan. Now the next section is really just you buying a house in general. What most people don't think are going to be part of their closing costs are actually your taxes and your insurance that's going to be affiliated with that house. And when you're going through buying the house, you're going to have an insurance policy. And at closing, they're going to collect the first 12 months of that policy right up front at the time of closing. So if you reach out to State Farm or your insurance broker and they tell you that your first year's policy is going to be $4,000, then that's $4,000 added to your closing costs. Now, on the other hand, if they say it's only $2,000, this expense drops down to $2,000. But regardless if you're getting a loan or not, you still have to pay your insurance. Now, the next major portion, which happens on the majority of loans, is going to be what's called an escrow account. Now, this is just a weird term for saying where you're putting your taxes and your insurance throughout the year. So as you make your monthly payment back to the bank each month, you're going to be setting aside a little bit of money for your taxes and your insurance bills. So next year, once it comes due, it's all going to be paid in full. Now, how does this have anything to do with your closing costs? When setting up an escrow account, they're going to collect 3 months of your taxes and 3 months of your insurance. So they have a little bit of a buffer in that account. So you'll never have to be in a situation where you don't have enough in there to pay your taxes and your insurance at next year's bill. So in total, this is a spot that surprises people, but your taxes and your insurance alone can cost anywhere from $6,000 to $8,000 and maybe even more if you buy a bigger house. Now, I know I've covered a ton of expenses and it seems like it can all add up, and this doesn't even include your down payment, but there's really good news about what you can do with these closing costs. Now, I've got a client right now who I was just talking to right before I sat down here, and he only had a certain amount of money to be able to pay for closing, which in his case, in the house that he's wanting to buy, was really only going to cover his down payment, and he didn't think he was going to be able to get into a house and actually make a purchase. So when we sat down and went through all of these expenses, we wanted to know that total number for him. And once we added it all up, it came to a roughly $14,000. Now, in his scenario, his down payment wasn't even $14,000, so this seemed a little bit overwhelming until I told him this one strategy. The plan we came up with was how he was going to make the offer on the house that he wanted to buy. This house had been on the market for a long time and it hadn't really got much interest, but he really liked it and wanted to make the offer. When we first discussed, he thought since it'd been on the market for a long time, he would just offer $15,000, $20,000 less than what the actual purchase price was. Now, this was great, but the guy makes plenty of money to be able to qualify for the monthly payment, and he was completely comfortable with where his payment was going to be at, even if he offered the full amount that the seller was asking for. But what we did instead on his offer, instead of asking for $15,000 off of the purchase price, we actually asked for $15,000 in credits to come back to him from the seller at closing. Now, since the seller was motivated, they agreed to it and they accepted his offer. Now, what this was able to do for my client, he only had $14,000 in closing costs, so we were able to get every single penny of his closing costs covered by the seller with the way that he made his offer. And with that extra $1,000, he put it to that first cost that I mentioned called points, and it even lowered his interest rate even further. So getting into this house, all he brought was his 3% down payment, and then all of the rest being covered by the seller. He was able to walk in, and he even kept a couple $1,000s set aside for whenever he wants to furnish the home. And it's better to understand them earlier than later. That way, so you're not only not caught off guard, but you have a plan to even get them covered by a seller. So when you're starting to shop for a home, you're seeing all these advertisements, these beautiful interest rates that they seem to be. Make sure to look into these costs and make sure you're not overpaying for things that are unnecessary. But as you can see, if you plan early, there's ways to get everything covered and make these costs a lot more tolerable. If you made it this far, thank you so much for watching. I hope it was beneficial for understanding closing costs. But if you have any questions, just leave a comment on this video. But if you want to reach out to me directly, just look at my profile. I've got all my contact information there and you can give me a call. Thanks again for watching, and we'll see you on the next video.